Hello, my name is Jody Samuels, and welcome to Week 2 of my Trade of the Week series on the Forex markets through the FX Trader's Edge. I created a course, and I'm an online trading advisor with Trading Post Financial Services. I also provide one-on-one coaching services through my private coaching program. To find out more about my course and online trading room, please go to tradingpostfinancial.com or contact me directly at jody@fxtradersedge.com. This week we talked a lot about the yen pairs. We felt that we would have a fairly volatile week for the yen pairs leading up to the G7 meeting this weekend. We determined that there would be news coming out during the week highlighting the meeting, and surely there was. There was some news highlighting the imbalances between Asia and Europe. So that gave us the first clue that we were going to be focusing on the yen pairs and that we could be in for a nice ride, which is what we had this week. Let me show you the spreadsheet that I put together earlier in the week highlighting the 7 yen pairs that we looked at. We're not going to go into the details of this spreadsheet. However, you can see the yen pairs along the left-hand column, all 7 of them. We determined after looking at the charts, the daily charts, the 4-hour charts, that all of the patterns were pretty similar. It often happens that way, that when we are about to have a big move in the yen pairs, that they are all in sync, and that's what we were checking for, that they were all in sync. So on this spreadsheet, we determined what the some of the Elliott Wave targets were based on the wave A or the wave 1, the wave 2 or the wave B, etc., looking for our target for the wave C. We also noted the Fibonacci retracements that you're all familiar with, the 50%, the 61.8, and the 76.4% retracements of the initial move down in these currency pairs. So we were actually looking for a retracement in these currency pairs and a way to get in because we knew the move wasn't over yet. It was just beginning. We also noted some trigger points, the 1, 2, 3 reversal pattern, so the trigger points to get into a sell. And we determined our stop loss levels as well. Some of the comments after doing this checklist, and I urge everybody to do a checklist when they're analyzing swing trades, some of the comments indicated that a good trade in terms of its setup might be the Canadian yen, and that's exactly what we focused on. We put on a trade recommendation for the Canadian yen. And that's what we're going to see on the next page, what the actual trading recommendation was. Here is the trade rec, Canada yen trade plan. You can see on the left that it was a high probability trade to short the pair. The 3 profiteers, which is my proprietary profit taking targets, is determined. The entry point is at 1875. The 3 profit levels at 1820, 1786, and 1731 are determined. 2 out of the 3 profit levels were achieved. The 1820 made 55 pips. The 1786 made 89 pips. The third lot, or any multiple of 3s, did not achieve its profit target, but it did get stopped out at break even. So this was a successful trade all around. Now let's look at the charts to determine how actually did we come up with this trade recommendation to begin with. This is the 1-hour chart of the Canada yen. You can see the trade setup, which includes a bunch of moving averages on the screen as well as an oscillator at the bottom. We're going to focus on the moving averages and the actual chart pattern that we see in front of us. As you know, when I look at the charts, I'm counting waves. I'm an Elliott Wave analyst, but I also have a chart setup that I follow, and this is how we run the room. We have chart setups, which includes moving averages as well as the Elliott Wave counts. So here we go. We determine that we traded up in 5 waves. So this blue 5 was the end of a cycle. I'm going to circle it. And the beginning of the next cycle, which would be down. Now, we did not get into the trade at that point. In fact, I'm going to highlight 3 different places where you can get into the trade, and then I'm going to show you where we got into the trade on the trade rec. And of course, there were some of us, and myself included, that did a few trades on this currency pair during the week. I'm just going to highlight one of them, but I'm going to show you, when you're analyzing a market, the three places where you might want to consider getting into a trade like this. There are more, but I'll just highlight 3. Number 1, you have a 1, 2, 3 setup right at the beginning. So I'm gonna put a box around this 1, 2, 3 reversal pattern. The trade entry would be right here. That would be the first trade to get in on a break of that level there. If you miss that and you're counting the waves, then you would count 5 waves down where you see labeled an A, and then you would look for a retracement back up again, which we would label a B. It's that retracement that would give you your second entry point. In fact, the retracement was exactly 61.8% of the initial move down. Now, you know 61.8% is a very important Fibonacci number. So this could be, or thereabouts, the second trade entry with a stop above the 76.4% retracement level, for example. The third entry has to do with the moving averages. So let me just label this. We have 1, we have 2, and now we're going to come up with a third entry point. We're going to focus in on the moving averages when they come together here. And you can see that we have a trend line right here. When we break the trend line and when we break through these moving averages, this is a third entry point right here. We're going to call that a 3. Okay? And now I'm going to show you at which point the trade plan came out. So we had 3 entry strategies so far. The fourth one is when we put out the trade plan towards the end of the week, was after we had the move down and traded back up again to this point. We had resistance at all of these moving averages. This was the point right here where we placed this trade recommendation. And as you can see, this is the hourly chart. We had 2 profit targets in blue that were met. So the black horizontal line is actually the place where we entered the trade, and the blue targets are the 2 places where we exited the trade. And as I mentioned, the third lot got stopped out at break even. Now let me just show you the 4-hour chart to show you how we came up with our third target. This is the 4-hour chart. As you can see, the third target is at 117.31. Well, lo and behold, that target is just above these set of long-term moving averages. So that was one of the ways we determined that. Another way that we determined that was to measure the distance between the move down for the A, and we felt that we would have a similar move in magnitude once the B finished, and we would come down for a C. So adding the 2 up, we came up with our 3 profit objectives. That was the trade of the week. It was a good week. It was a successful week. I encourage you, if you want to learn more about the Elliott Wave course or about joining the FX Traders Edge OTA, please contact me at jody@fxtradersedge.com or look at tradingpostfinancial.com. Happy trading. See you next week.